Hi everyone, I'm Carly Iacono. Welcome back to Commercial Real Estate Now. Owning real estate doesn't automatically make you a great operator. Managing it well does. Too many investors buy a property, sign a long-term lease, and then go on autopilot. Hands-off ownership often produces hands-off results. Today we're breaking down 5 habits that separate engaged asset managers from those who simply collect the rent. The small disciplines that protect your income, your value, and your exit strategy. Let's start with the least glamorous but most expensive place to get sloppy: CAM billing. Unless your tenant completely self-manages the property and pays all expenses directly, you're going to have some sort of CAM billing and end-of-year reconciliation. Even if your property is triple net, never just trust the math from the previous owner. Review reconciliations carefully. Confirm that you're recovering every allowable expense: property taxes, insurance, management fees if permitted by the lease, and true common area maintenance costs. I've seen owners leave tens of thousands of dollars on the table simply because they never check the backup on a reconciliation. One miscategorized expense carried over for 5 years can really eat into your NOI and quietly lower your property's valuation. Send mid-year CAM estimates so tenants know what's coming up. Also be sure to revise your monthly or quarterly CAM billings throughout your hold period to reflect the current costs and minimize the amount due during reconciliation. Next, maintenance. Net lease doesn't mean no oversight. If you own single-tenant triple net properties, your tenant might handle repairs, but that doesn't mean they'll always do them well. I recommend annual site inspections for roofs, parking lots, signage, and HVAC. If the tenant cuts corners, it becomes your problem when you go to sell. For gross or modified gross leases, schedule routine maintenance just like you would rent collection. Preventative maintenance is almost always cheaper than emergency repairs. Document all your inspections and store the reports. Future buyers and lenders will see that you manage the property proactively, and that adds real value. Number 3, never hold without a plan. Know your loan maturity, your interest rate, cap expiration, and any prepayment penalties. Track when refinancing actually makes sense versus when it's forced. Markets move fast. If you don't model your exit strategy 12 to 24 months out, you'll end up reacting to the market instead of leading it. And when lenders pull back rates or rates spike, that can mean the difference between keeping or losing a property. Good asset management is capital management. Number 4, don't let the market outpace you. A property that's fully leased is not necessarily fully optimized. Track rent comps and vacancy quarterly, just like you track your portfolio's value. Call your brokers, read the quarterly reports, and get updated BOVs, broker opinions of value, at least every 18 or 24 months. They're free intelligence and keep you grounded in what your asset is worth today, not just on paper. If rents are up 10% in your market, for example, it might be time to re-tenant instead of negotiating an extension with your existing tenant. If, on the other hand, vacancy is creeping up, it may be time to secure that next lease renewal before the tenants start shopping around. Anticipate and act. Don't wait until space is dark. Number 5, organization. You can tell everything about a landlord by how their files are kept. Keep clean, cloud-based data rooms with leases, amendments, estoppels, service contracts, insurance certificates, and environmental reports all labeled and current. Please. This isn't just about being neat, it's about speed and credibility. When you go to refinance or sell, being able to send a ready-to-go folder tells the buyer or lender this asset is professionally managed. That confidence translates into smoother due diligence and sometimes a higher sales price. In summary, treat every property like a living business. Know your expenses, manage your tenants, and plan your capital while you watch the market. I'm Carly Iacono. Thanks for listening to Commercial Real Estate Now. If this episode gave you some ideas to tighten up your portfolio, share it with another investor or connect with me on LinkedIn for more insights on how to maximize value in your holdings.